All right, my lovelies. Here we go. It is Friday, October 25th, 2019. This is my pre-market report. It's just going to be lovely. Absolutely lovely today. Why is it going to be lovely? Well, let's start off with this. Market doesn't open for about 40 minutes. Stock futures are in the red. Nothing major, in the red nonetheless. Cryptocurrencies are catching a bid. Gold and silver are catching a bid. But look, let me ask you, gauging from, if you follow this blog, you have an extremely good handle on the goings on behind the scenes in this market. Where do you think stocks are going, let's say over the next couple of weeks? You think they're going lower? No. We will be seeing new record highs very soon. What did we find out just yesterday? Well, the Federal Reserve, even though they have just expanded their QE, said they're willing to do more. So if the Fed is willing to do more, which means they will be doing more, how can stocks fall? They can't fall, and the Fed will be buying stocks. So in my opinion, until that moment where we hit the wall, and we're going to, look, I believe the law of diminishing returns applies here. Let's think about it. The Federal Reserve is going through some Herculean efforts right now to keep the debt market propped up. Henceforth, cash is moving into the stock market as well. In order to keep this system going, even more effort is going to be implemented. I mean, there's no doubt about it. This is why the Fed said yesterday they're open to more stimulus, open to more QE. Look, these institutions around the world, they tell us what they're going to do before it happens. So by them saying that they're open to more, that means they will be doing more. So again, this goes back to what I've been explaining to you. Unless you are an intraday trader like myself, don't short this market. Don't short any aspect of this market. Don't try to get fancy. Trade a single index. Me, I trade one and one only. SPY. That's it. And I just let the market do what it's got to do. I remember, like I always say, people, trade the market you have. The market in front of you, not the one that you're dreaming about, thinking about at all. If you maintain that mentality, you'll do well here. Longer term, people, I can't stress this enough. After what we heard yesterday, again, from the president calling for lower rates, calling for dollar intervention, if you still believe the right place to be is in the dollar, then I don't know what to tell you anymore. You need to be getting out of the dollar, betting against this debt, becoming your own central bank. People, I know you get this if you follow this blog, and I've explained this to you I don't know how many times, but look, I study this market around the clock. You all know that. I've done it for years and years and years. It's kind of crazy, but I have never seen distortions like this ever. And I've studied the market going back as far as you can think to every single market crash, every single market top. We have never seen anything like this before. This environment is unique. The asset bubbles existing here, and inverse bubbles, inverse being gold, silver. I think cryptocurrencies are also in an inverse bubble. Because of the effort being put forth to keep these prices suppressed. I mean, it's so simple. We know what they do with regard to gold and silver. The hard asset derives value from the derivative. It's upside down. The bank after bank, JP Morgan especially, getting caught red-handed rigging the market. No one gets in trouble with regard to cryptocurrencies. The fact that Wall Street has its ugly, disgusting hands on Bitcoin futures allows them to rig the markets as well. It's not hard to rig the cryptocurrency market. They're thinly traded. All you need is a couple of big players to manipulate the price, and that's exactly what the banks are doing. But again, why? Let's go back to the big spectacle with Zuckerberg before Congress. If you listened to what was coming out of the mouths of the Congress people, they understand where we're at. The Federal Reserve must remain the king. Their product, their issued notes, they don't want you in anything else. They want you in those notes. Henceforth, why they're beating up Libra or any cryptocurrency. Why the president is against cryptocurrencies as well. You all know that, right? He's spoken out against cryptocurrencies, Bitcoin especially, many, many times. No, they need you and want you in Federal Reserve issued notes. So that should tell you something. You should not be in Federal Reserve issued notes. So, I mean, it's very simple. To put this all together, know what you have to do moving forward. All right, anyway, so right now, again, stock futures are under pressure. The environment is risk on. The Fed has already said they're willing to do more, and they are going to do more. If you doubt that, then you're in the wrong spot here. Believe me, and you're going to lose. So expect a lot more stimulus, a lot more quantitative easing, not just from the Fed, but every world central bank. They're all run by the same entities. Expect world leaders to call for lower rates, to call for currency intervention here. Again, it's a grand scheme. It's a grand plan to eliminate the middle class on a worldwide scale. So if you are a member of the middle class, you have a target on your back, and you better do something about it. I got to go back to work. Love all of you. Share the video, please, and I will see you at the end of the day.